So analysis of production cost statements. In the same way as we do an analysis of the income statement and the balance sheet, we need to do an analysis of the production cost statement. This analysis involves taking each item and calculating its unit cost. In this way you can ascertain which costs are highest, above or below budgeted costs, and can be used to compare from year to year and thus control the cost structure. Example, Bongi's Belt Factory. You are provided with the production cost statement of Bongi's Belt Factory, which produced 1,000 belts during the year. There was no work in progress either at the beginning or at the end. The belts are sold at 52 Rand each. All belts produced were sold. You are required to calculate the following. And then they say in brackets, assume that all factory overheads and administration costs are fixed costs and other costs are variable costs. So these are the number 1 to 10 is what you have to work out. So they give us the production cost statement of Bongi's belts. A direct cost is 8,000. And if we divide it by 1,000, because remember they said that they produced 1,000 belts during the year. So in order to get my per unit, I will divide it by the number of goods that I produced. So 8,000 divided by 1,000 gives me 8 Rand per unit. 15,000 divided by 1,000 gives me 15 Rand. And that's how you'll work out your per unit. And obviously, from activity to activity, you will divide it by the number of items that was produced in order to get your per unit. Okay, so moving along to the next page, they gave us the sales, the cost of sales of goods sold, our gross profit, and the selling and admin cost, as well as our net loss. They made a loss. And how did we get the per unit? I divided it by the number of goods produced. In this activity, it was 1,000 Rand. All right. So now you are going to be working out what they've asked you, the direct material cost per unit, and so forth. And they've given you the formulas in the middle. So the direct material cost per unit, we know that they gave us direct material cost, it was 8,000, and I divided it by 1,000 Rand in order to get the unit cost of 8 Rand. I done the very same with direct labor. I went to the direct labor in the production cost statement and I divided it by the number of products produced, and that gave me 15 Rand. Total direct costs. What is your total direct costs? It's the value of your direct material and direct labor added together, which was 8,000 plus 15,000, which will give us 23,000. And if you want to just make sure, there's it, the direct or prime costs. And you're going to divide that by 1,000 Rand in order to get what is the total direct cost per unit. Factory overheads, you will look at your factory overheads in your production cost statement and divide it by the number of products produced, which was 1,000. And then the cost of the finished goods per unit. Where are you taking this from? You're getting it from the total of your production cost statement, which in this case was the 40,000. Cost of production of finished goods, 40,000 divided by 1,000 Rand, and we came to a total of 40 Rand. Then selling and distribution, you'll take it in the income statement, which they gave to us here, 5,500 divided by the total units sold or produced, well, total units sold. And they told us in this activity that all the goods that was produced has been sold. So you're going to divide it by 1,000 rand and your answer will be 5 rand 50. Admin costs. The admin cost for the year was 8,500 and I'm dividing it by the total units sold, and I sold 1,000, so I'm going to divide it by 1,000. And then your variable costs per unit, it's your direct material costs that can change from month to month. Direct labor costs, you adding that two together, and you adding the selling and distribution cost. So you're taking your 8 rand of your direct material cost, you're taking the 15 rand of the direct labor costs, and you're taking the 5 rand 50 of your selling and distribution. You're adding those three figures up, and that should give you variable cost per unit worth 28,850. Why is direct labor a variable cost? Because I don't make the same products every month. So if I am paying my laborer to produce 10 goods at 1,000 rand, I'll be paying him 1,000 rand if he produces 10. But if he produces 5, then I'll be giving him 500 rand. Okay, so it depends on the number of goods that the laborer has produced in order to get his payment, which makes it variable. So with your direct material cost, you may make more this month than what you did last month. And obviously your selling and distribution costs will also differ depending on how much goods you have sold. So those are your three variable costs per unit. Your fixed cost per unit will be your factory overheads and your admin costs that you are adding together. So here's the admin of 8 rand 50 and the factory overheads of 17 rand. So you're adding those two up in order to get your 25 rand and 50 cents. Then selling price per unit, you're going to take your selling price over the number of goods or units sold, and they said that our selling price was 52,000 divided by 1,000 rand, and we should get 52 rand per unit. All right, so that will help you. Then our break-even point. In order to complete this, you need to read the following information given to us. So I'm reading from the top. An important consideration that a businessman must consider is how many products he or she needs to sell before he or she starts making a profit. Let's take an example of the dressmaker Annette. She makes and sells t-shirts. The selling price of each t-shirt is 20 rand, while the cost of the material, cotton, etc. is 16 rand. This means that each t-shirt contributes 4 rand towards the payment of the fixed costs. In this calculation, we are referring to the direct costs of production, i.e. your materials and labor. Each 4 rand made above the variable cost on each t-shirt goes into the pot to use to pay for fixed costs. Only when the difference is higher than the fixed cost per item product can a profit be made. Fixed costs are those costs that stay the same, irrespective of how many items are made. Example, rent and rent, salaries, etc. If she made 4 t-shirts, then she will have made 16 rand contribution that can be used to pay for these fixed costs. If the fixed costs were actually 240, how many t-shirts would she have to make and sell in order to get enough 4 rands to pay this 240? So you'll take your 240, which is your fixed costs, and divide it by the 4 rand contribution, basically the profit that you would have made on selling one. In order for this person to break even, she will have to sell 60 t-shirts in order to cover her fixed cost. So we refer to this point as the break-even point. It tells you how many items that you must make and sell before you can start making a profit. That means that only after 60 t-shirts will she start making a profit, i.e. if she makes 61 t-shirts or more, she will make a profit. This is a very valuable calculation in business. Annette needs to assess whether she thinks she will be able to make and sell at least the break-even point before she starts production. If she thinks that she can sell only 40 t-shirts or has time to make only 40 t-shirts, then this is not a viable business proposition. It was a business idea, but not a business opportunity. So when you have your own business, you need to be able to cover your expenses. If you are not covering your expenses, then there is no way that you will even be able to make a profit. So what this is saying is you need to figure out what is the break-even point. What is the point where you will be able to pay your expenses without having to worry? And still after that, you are a businessman or a business lady, so you want to make a profit. So find your break-even, the number of units you need to sell, and then can I make more than this? And that more will be the profit that you generate. So our formula for break-even is our fixed cost over selling price per unit minus variable costs per unit. And then they say refer to Bongi's belt manufacturers and calculate the break-even point. So her fixed costs were, where is the fixed costs? So our fixed cost per unit was 25 Rand 50, and remember I want the total amount. That's just per unit. So I'm going to say 25 Rand 50 times 1,000. Why is it times 1,000? I'm multiplying it by the number of goods that I produced and sold, and that will give me 25,500. All right, so that is where I got that 25,500, and I took the selling price per unit and I subtract the variable price per unit. All right, so how many units does this person need to make, Bongi, in order to break even? She needs to at least have 1,085 units that must be produced. And did she make a profit or a loss in this case? She would have made a loss because remember she only sold 1,000 Rand. So she made a loss by 85 belts. Alright, so please complete activity 13.7 with this information in mind. The first line has been completed for you. And then you just need to complete the rest. Thank you, ladies and gentlemen.